Hello guys and welcome to another weekly special video, and this is the Bank Nifty's price action today. uh, but since it's a weekly video, let's start from uh, a weekly start. But today, as you can see, we have seen a pretty volatile day in the Bank Nifty. Okay, it has gone all the way till down, and from here it has recovered very sharply towards the closing of this week. That is from almost 2:30. Market has seen a very sharp rise, but then again, in the end, in the last couple of 5 minutes candles have been towards the downside. Okay, so we'll come back to this intraday chart later, but let's start from our weekly chart, since it's a weekly special video, and see how weekly charts are looking. Okay, so for that we need to select a weekly chart there, and here we have the weekly chart. Okay, so last week we have clearly seen a breakout, and on a weekly chart it was looking bullish. Okay, it was a breakout from this level. All right, so it was a breakout from this level and it was looking bullish. See what has happened this week is even though, see, even right, even now we have seen a close right above this line. Okay, it is actually a zone if you mark it properly. Okay, this entire thing is a zone. So uh, the opening and closing of the Bank Nifty for the entire week on a weekly time frame is in this particular zone. But what happened is, during this week, Bank Nifty has come all the way down to this level. Okay, and tested this 47,500 level, which acted as a pretty good support for the Bank Nifty, and it has sharply seen a recovery from this level. Okay, but this week it's going to be crucial because we have created with this price action. Okay, so now we have this range. That is because these two candles put together on a weekly time frame is giving us a candlestick formation called a hammer candlestick sorry, an harami candlestick formation, which is a halt and reversal sign for existing trend. So now in this case, on a weekly chart, what is the existing trend? Existing trend is an uptrend. Okay, so looks like now it is in this zone. Okay, in between these two green lines. So once after, on a weekly time frame, if it crosses this level or if it crosses this level, then we can come to a conclusion about the Bank Nifty's direction on a weekly time frame. Okay, so don't try to we are at to see how this week is going to perform, but seeing this kind of price action on a weekly time frame, we can safely assume to a certain extent that, okay, this zone, okay, it is safe not to trade anything positional on this zone until it crosses these two levels, either upper side or towards the lower side. Unlike from last couple of days. Okay, so here you see, when was the last harami candle formation? That is here. Okay, that is here, that red candle and this green candle right here. Okay, I'll show you those candles once again. Yes, so these two candles put together are called inside candle formation. The first red candle of 13th November week, and November 20th candle, that is 20 this week. These two candles put together, it's an inside candle formation in the Bank Nifty. That was like more than 1.5 month before. So 1.5 month before, we have seen an inside candle formation. So from there, we have seen a breakout towards the upper side, and that has resulted in a very good momentum in the Bank Nifty for the next couple of weeks. Okay, now if it start consolidating in this zone, okay, on a weekly time frame, then we can expect Bank Nifty to form solid levels here, and then from here it will take a pretty a long time to come out of this. It will take a couple of months in some cases, but if it sees any breakout towards the upper side, then take it may go up. But if it sees any breakdown towards from there, then it is going to see some a good a momentum towards the downside. But the point here is, you should be careful in this zone, because it has created a kind of inside candle formation with these two limits, this limit and this limit. Okay, so it doesn't mean that always you will see a instrument going towards that particular direction of the breakout. In some cases it may also fail. Okay, so you should be prepared to see which side it is going to reverse. In that case you should protect yourself somewhere, on the other side, on the other limit. Okay, but don't carry forward any positions. I request you, if you are an intraday trader, first learn trading and then do your a proper back testing and live testing, and then you can uh, think of positional trades. Okay, so that's about the weekly chart here. Okay, now let's remove the drawing, and let's retain only these two levels and come to our daily chart and see how the daily chart is looking. So based on these two green lines which are coming from a weekly time frame now. Okay, so these lines will be there for some time. Okay, but let's understand the price action here. Okay, here after yesterday's price action, right, this green candle. Okay, today we have seen bank nifty coming all the way down, and it has tested this level and then sharply bounced back. But before that we have this candle formation. Okay, this is a hammer, this candle formation right there, which took some sort of a support, very well support from this area. Okay, from this line. So now on a daily chart, it looks like it has already in a sideways zone, because this is the higher limit. Okay, let me change the color. Okay, yeah, so this is the higher limit, and now this is the lower limit. Now we have seen pull back down and here, and now we are here somewhere. So even in bank nifty daily chart, you should be careful with these two levels, because it is a swing high and also an all-time high, and this is the swing low. Okay, in between this, there is a chance for the market to see some sideways action. There is some accumulation happening from the last couple of days. If you notice this entire price action there, even though the market is trading at all-time highs before. Excuse me with the dark bar in the background. All right, so that is how it is looking on a daily time frame. Now let's jump to nifty. Okay, from bank nifty, and let's get a weekly chart. So here we have the weekly chart of nifty. So nifty was also extremely bullish on a weekly chart last week, because we have seen a breakout from this level and it has given us a close there. But notice this week, okay, it is not so bullish. It has come back to test some levels. Okay, it has tested 21,500 level here, which acted as a pretty good support in at this level. But it has given you a very small real body, which means that it is a spinning top. So it is partially a harame candle pattern here as well. It's like, but it's okay. Okay, it's okay. Yeah, it's okay. It's not violating anything. So yes, this is also a harame pattern. See, for a harame pattern, for an inside candle formation, to see a valid formation, all you need is a body within the previous candle's real body's range, not the wick, not the shadow. Okay, we are talking in comparison of the real bodies of these two candles. Now as you can see, this real body is exactly in the range of previous candles real body. Okay, so here also we are seeing a similar situation like bank nifty on a weekly chart, where we have seen now an inside candle formation. Okay, now it's better to so on a weekly chart it is looking like there is going to be some stop for this moment, but we don't know whether it's going to pop up to from the all-time highs, or it's going to come down, or it's going to stay here. But remember, these levels are going to be important on a weekly time frame. Okay, very important levels are 21,500 and 21,000, around 840, 850 levels, which is all-time high for the nifty. So that is how the weekly chart is looking on a nifty. So this week prediction for the bank nifty and nifty both are not very clear because of the inside candle formations. Now let's check how it's looking on a daily time frame. So from a daily time frame, here you can see that it has sort of given you an inside candle formation yesterday, and it has given you a breakout, but this breakout itself is not very strong on a daily time frame. Okay, and also you can see that marginally you can see a volume is little less today than yesterday, and yesterday of course is a expiry for the Nifty, so that's okay. But it's always safe to check on volumes as well. Okay, so here you have seen a breakout from this level here for the Nifty, but we have hardly seen uh, any positive candle today, in spite of this very small real body there. So if the Nifty is coming towards the top, as we have discussed earlier, and in yesterday's video we have clearly marked this level, as you can see, it has exactly taken support from exactly this line. Okay, so we have discussed about this level yesterday. If you have seen yesterday's video, you would know that we have discussed about this level. So on the downside, if it is coming down, okay, for the next couple of days, then definitely this level is must to watch, and also this level is must to watch. Okay, so it's just to understand the wider markets on a wider picture, but you should be really worried about the swing highs and swing lows on an intraday time frame, that is on a 5 minute or 15 minute chart. If you are an intraday trader, this is just to understand the wider market, wider picture of the market for the coming week. Okay, so now let's see how Bank Nifty or Nifty, let's pick any one. It's We have been checking Bank Nifty every day, so let's check Bank Nifty. So let's get Bank Nifty 5 minutes chart here, and let's see how we should have seen the market, and let's see whether there are any opportunities today which can leave us some lessons for the future markets. Okay, so first thing is first, you have to mark a swing high and swing low. So here you have a swing high, okay, after this momentum, and after this momentum right here. Okay, so after this momentum right here, here you know that this is a swing low. Okay, so this swing low is marked, and that swing high is marked. Now all you have to do is wait for the price action to come to that particular levels and see how it's happening. So here you have seen again, see, today we have been talking about this inside candle formation multiple times. That is the power of a harami or an inside candle formation. The frequency of its occurrence is very high, and also it works majority of the time when it pops out. Okay, so here you have seen an inside candle formation coming at this this resistance area that we have marked from this initial price action today in Bank Nifty. So what can be done, or what you should have done in today or in future, if you see any certain um, candlestick pattern, is to wait for its breakout. Okay, some will wait for its breakout and see a close beneath this, but since you have this as a resistance area here, okay, here you should have definitely taken a trade if your risk versus reward ratio is permitting you to take to get into that trade. So in this case it's a short trade, so here you would enter with this as your perfect target, and of course above this is your stop loss. Yes, your risk versus reward ratio is 1.06 here, so in this case it worked for 70 points. So here you have seen a very good 70 points of momentum. Okay, for those who have trailed it till here, okay, would have seen a 92, but those who wanted to trail it further, it didn't work right away, but it worked after a small pullback. So here you see what has happened is, here you have seen an another here you have seen another uh, a kind of inside candle formation if you see it from the distance. But if you look at it closely, it's not an inside candle formation, because this green candle is opening. Okay, it has opened at, okay, this body is really not inside this candle's real body. Okay, so it's better to wait and see. But this candle itself is, these two candles put together itself is called a piercing candle variant. Okay, it is one of the variant in the candlestick formation called a piercing candle formation. So here you have a piercing candle formation. So some might have thought that it's going to be, because that is coming at this key important level. So here you have a stop loss there, and your initial target would have been this. Yes, in this case also you're seeing a risk versus reward ratio of 1.12 which is good. So here someone might have taken a trade, but they have seen a stop loss, but this stop loss is very big. Okay, so because we would wait for a candle to close, not just to pass that level. Okay, because the frequency of the probability of candle getting closed at above or below at a certain level is very less than candle passing that level. So now what is one way to avoid this stop loss is, you might have unlocked your volume. Okay, and then checked your volume. So in this case volume is also high, so it's absolutely a genuine stop loss in this case, so which is absolutely fine. So here you are seeing 100 points of stop loss. Here you have seen around 87 points, that is roughly around 30 points of profit, sorry, 30 points of loss is still there at this stage, imagine. Okay, but you see here you have seen a confirmation candle after this breakout. Okay, here you have seen a confirmation candle after this breakout, which means that this is a genuine breakout. Okay, which means this is a genuine breakout. But where should be your target if you want to trade towards the downside? Pretty simple. On the left, if you see, this is one level where you have, because that is the level which was holding up pretty quickly, pretty nicely for yesterday. So this would have been your target, but your stop loss is pretty huge here. If you want to get into a put trade here, risking excuse me, your capital above that level to achieve only this much of target is definitely a foolish step. So this is not a valid trade. But if you notice here again, because that is a pretty good support level from yesterday, you have seen a breakout from there, but then immediately you have seen a breakout fail because you haven't seen any confirmation candle at 11:20. So here at 11:20, if someone might have taken a trade here to reach this level, that is achieved with this as your stop loss. But again this is larger than this one. Okay, so this is not a good habit for any. If you want to become a professional trader, it's definitely not a good habit if you want to jump into a trade where your risk is more or than your profit. But here if you notice, you have, looks like you have a second option here. Okay, a second chance here, right here. Okay, so here it is giving you another positive candle, which is a variation of BSN candle, with that as your stop loss and this as your target. In this case, yeah, even in this case, no, it's not 1:1, it is only 0.08. So here also you should have avoided that trade. But if you notice here, okay, this is another swing high, right? This is another swing high, right? But if you notice here, here you have seen an inside candle formation again and a breakout towards the downside. So in this case you might have, I know I'm going very detailed in today's price action, but since it's a weekend, we have a couple of days holidays, so why not? Yeah, let's those who are interested, okay, let's see. Okay, that is your stop loss. Those who are interested can follow us throughout the video. Will go into a very greater detail today and see how this could have been traded. Okay, so here in this case also you have more than 2.7 as your risk versus reward ratio, so this is a very good entry. But then your stop loss was taken, your stop loss was taken at this point. Okay, let me, yeah, and this is a stop loss of minus 29 points. That, let's consider it as 30 points, and 30 is 60. I know some might have wondering that, why to take positive trades on a negative market like this, but it's okay. We are following a certain strategy, right? Let's see how that particular strategy um, was working towards us or against us. To know this, at least this detail is necessary, is what we feel. So here you have seen a breakout from this level. Okay, but also if you notice, you have another intraday resistance zone there, and you have another harami pattern here. Okay, so this harami pattern, okay, so this harami pattern right here would have given you another short entry. But this time if you notice, okay, but this time if you notice, your stop loss would have been initially above that, but you can't help it, so you would wait for a candle close above this. Okay, that is the true meaning of taking stop loss, not just for a small whipsaw in some cases. So that stop will not be here, some candles might have closed there, but you have to deal with it on a daily basis, because that is the right way to do. But see, here your initial target would have been this swing low, or some might have taken targets here also. So it depends on what kind of a risk taker are you. Okay, so this target was hit, okay, this target was hit, and then this target was hit, and this target is your next target, that is also hit. So after this, which is your next target, this line is your bottom line, is your next target, you see here. Okay, but if you notice, after reaching this point, you would have trailed your stop loss, right? So you would have trailed your stop loss to this line. Now let's imagine this green line is your stop loss. Okay, so now this is your stop loss, right? So when the prices are here, when the bank nifty is here, your stop loss is sitting there. But from here to here, during this journey, you should have got your stop loss to this level. Okay, isn't it so? You should have got your stop loss to this level, but it didn't reach this level. So let's assume that you have taken an entry, sorry, you should have taken an exit right here, which is 82 points. So how many points of loss we have earlier? 60 points. Now it is 82 points of profit. We are not talking about the option price, we are talking about the points movement here um, in this case. Okay, so it is now minus 60 plus 22 is equal to, sorry, plus 82 is equal to 22. So 22 is our net now. Okay, so let's check again what has happened. So next time, here you have seen a breakout, here, and here you have seen a failed breakout. Okay, so here you have seen a failed breakout, but this is where you should be concentrating on drawing. Okay, so let's not confuse, let's go with the same strategy only. Okay, all right, let's worry. See, actually there is another way. Okay, you should have drawn this entire zone as a sideways market after a certain moment. Okay, so you have seen a moment, this, right? Okay, after that we have seen sideways momentum for this long. So when you see a breakout from this zone, again there is a chance for the market, to move this much towards the downside. But let's not, that's another topic for another day. Let's not get confused, let's get mastered or familiarized with one concept thoroughly, and then we can talk about that. Okay, so you see here, okay, we have seen a breakout, but then a failed breakout there. Okay, so here we should have uh, taken another entry if your risk versus reward ratio is permitting. Okay, here is your risk because that is your previous candle's close. Okay, and your reward, okay, even if it is this swing high, it is not 1. Okay, it is 0.97. If it is this, definitely it is a no trade. But if you see here, this is a bearish. See what is happening here. Okay, see, prices have given a breakout towards the bottom, and then again retested into this zone, and then again given you a bearish signal, which is a bearish engulfing pattern right here. Okay, at 1:55 p.m. and 2 p.m. candles. So this is a definite a pick here. Okay, but where should be your target? If you want, that it is a valid breakdown, okay, from this level, but where should be your target? Your target should be, you should simply look at your left. So here you have the first target, and your next target is, next price reaction is that, your next price reaction is this. Okay, so now that we have marked this, okay, excuse me, yeah, now that we have marked these levels, we wanted to enter there at the candles closure of your engulfing candle, this blue line, these two candles put together is called engulfing candle, right? So you should have taken a trade there with stop loss above this. Okay, and your risk is this, sorry, your target is this. See, now in this case you have only 0.7, excuse me, 0.7 risk versus reward ratio factor. But this time, see what has happened, it has touched this level, it has it has touched the second level, but before going to third level, it has stopped at this target. So it would have made 141 points, but because of risk versus reward ratio, we have not taken that trade, which is fine. So this target line means that there is some sort of price action on the left. Here is the price action from where you see yesterday's market. Okay, yesterday's market have started from here, gone there, gave this pullback and again gone there. So it gave this pullback and again gone there. So these pullbacks, these swing lows, which are higher swing lows, are acting as support and also target for the prices that are coming towards the downside. So here in this case, after touching the target, this has seen a good inside candle formation again. See, that is the life of a trader. See, if you want to concentrate on every candle in the market, and if you're dedicated, okay, if you're sincere enough to trade, okay, and if you're patient enough to look every candle, see what has happened. Here, you have a proper good risk versus reward ratio of 1.32%. You should have taken entry into the closing of this candle. And for those who are little scared to take entry there, that candle, next candle has given some sort of downside momentum till here. So even if you are entering here, this is a very less stop loss compared to this. So see what has happened now. We have seen a series of losses today, right? We have seen couple of losses today, right? But see what has happened. It has reached the first target, it has reached the second target. So on all these levels will become target for the call option. Okay, so here you have seen a target hit, here you have seen a target hit, next level is this target hit, next level is this your target hit. See how far it has gone. Okay, so your next level is this your target hit, next level is this your target hit, and your next level is this your target hit, and your next level is this your target hit, and your next level would have been this, but it didn't go till there. Okay, it has failed. Okay, so let's assume that you have taken your target here, or okay, let's assume that okay you have even you have not even uh, taken that target, you have taken this target. See, even now it is 284 points plus 20 points is how much? 284 plus 20 is roughly it's 304 plus 2 306 points of momentum. See, see, that is the power of discipline, not price action or not technical analysis. It is just simply the power of your discipline and your patience towards the market. It's not about number of losses. Sometimes you may see couple of losses in your initial trades, but that's fine. But if you are concentrating enough, okay, if you are sincere enough towards the market, see, it can reward you with this kind of a price reward back. All right, so that's it for today. I know this video is has become very lengthy, but I hope it's worth spending this much of time understanding dissecting the market since it's weekend. So I wish you a happy weekend and happy trading. See you in our next video. Until then, please subscribe, and if you have time towards the weekend, please do consider watching uh, candlestick pattern series so that you can learn some candlestick patterns. All right, thank you so much, and please subscribe for more such valuable content on Indian stock markets, especially Bank Nifty and Nifty. Thank you.